Today, I'm so excited to share with you 10 little-known methods to acquire the money that you need to purchase property and start a farm, or just to live in the countryside. No, I'm not talking about a traditional mortgage. There are other methods that might be more suitable to your personal circumstances, and some don't even require a down payment. In fact, some of them, such as government grants for instance, don't even have to be repaid. I'm a retired educator whose new passion and pastime is hobby farming. I've created this video for others who might have a similar dream of owning a hobby farm, a regular farm, or even just a rural home. As an educator, my natural instinct is to research just about everything before I start on a new venture. So if you have been wanting to start a farm but money has been the issue, this video is for you. This could be the pathway to making your dream come true. So hit the subscribe button at the bottom right of the screen, so that you can come along with me on my journey to help get you inspired. In fact, we can motivate each other. Most of us know about the traditional means of making real estate purchases. There is purchasing the property outright by paying cash, and there is the traditional mortgage. What many don't know is that there are other lesser-known means of purchasing real estate, and in this case, I'm talking specifically about rural properties and farms. The first method is owner financing. Some sellers will agree to act as the lender, whereby the buyer makes payments directly to them, and the buyer receives the deed to the property. This could even be a friend or family member or neighbor or stranger. Even if they're not advertising to sell, a landowner might be persuaded to sell you a portion of their property to build your farm on if they are made to see how the whole prospect could be beneficial to them. You would get your land and they would get some extra income. The second option is similar to the owner financing method, and is called a land contract or contract for deed. With this method, the buyer also makes payments directly to the seller over a specified period, until the full purchase price is paid. The buyer gains equitable title, giving them equity from the property's appreciation value. But the buyer doesn't receive the deed until the final payment is made. Third is lease-to-own, which allows the buyer to lease the property with the option to buy it at a later date. The advantages of this method are that it gives the renter a chance to decide if the property is right for them, gives them a chance to prepare their finances, and gives them the freedom to opt out of purchasing when the lease ends. Additionally, in many such arrangements, a portion of the lease payments may go towards the purchase price, thereby decreasing the final loan payout price. The fourth option is government-backed loans or programs that support rural or agricultural development. In the United States, for example, the USDA offers loans for rural property purchases. USDA loans are often a good option for people who want to avoid making a down payment, and they can have other benefits as well. For example, the government takes on some of the risk associated with lending, so USDA loans often have lower rates than conventional mortgages. Additionally, USDA loans don't have a minimum credit score. And equally beneficial is the USDA loans may also offer closing cost assistance, built-in financing for repairs and improvements, and no prepayment penalties. You can check out their website through the link included in the video description. Again, these loans are for properties located in rural areas for single-family living, and a farm setup is not required. Fifth is agricultural or farm ownership loans, also offered by the USDA. These loans and programs may offer more favorable terms for beginner farmers than conventional loans, and offer the same financial benefits as the single-family rural loans. Farm ownership loans can be used to fund the production of crops, fruits, vegetables, and livestock, or to fund the purchase or refinance of capital assets such as farmland, machinery and equipment, breeder livestock, and farm real estate improvements. Farm ownership loans will help you purchase or enlarge a farm or ranch, construct a new or improve an existing farm or ranch building, pay closing costs, and pay for soil and water conservation and protection. Sixth is partnership or joint ownership. This arrangement involves forming a partnership or joint ownership with others who share your interest in hobby farming. Such a method is great for establishing your own community of friends and/or relatives by sharing the costs and responsibilities of purchasing and maintaining the farm. Eighth is barter or trade, which is perhaps the most unconventional method of all nowadays. This involves bartering or trading skills or services in exchange for property for your farm. For example, partnering with landowners who need assistance with farming tasks, such as the elderly or someone who wishes to farm, but has disabilities that puts limits on what they themselves can do on the farm. In this instance, you trade your skills or physical labor for a portion of what the farm produces or for a section of their land to use for your own separate farm. Ninth are land auctions, where properties, including hobby farms, are sold to the highest bidder. But be prepared to conduct thorough research before participating in an auction. Such properties are usually sold as is, and there might be more work or more costs required than you are prepared to fork out. Ninth is equity from existing property. This may or may not have occurred to you, but if you own other real estate, you may use the equity from that property to finance the purchase of your hobby farm. This could involve a home equity loan or a cash-out refinance. Alternatively, you can sell it outright and use the proceeds to pay for your new farm. The 10th method works for many people who are just starting out or those with no experience in farming, and that's the land lease option. Instead of purchasing, you may choose to permanently lease land for your farm. This can be a cost-effective option, especially for someone who's not ready for a long-term commitment. Before deciding on any method, however, I caution you to carefully consider your financial situation, long-term goals, and the specific terms and conditions associated with each option. Additionally, consulting with financial advisors and/or real estate professionals can provide valuable insights tailored for answers to your personal situation. I hope that this information has been helpful to you. If so, don't forget to like, comment, and subscribe for more valuable info like this as I share with you my personal journey towards establishing my farm. And if you have any questions or comments, leave them in the comments section. Thanks for watching.